As we saw earlier, manufacturing in the Philadelphia region contracted at a faster pace than expected as orders and employment deteriorated. So what does this say about the outlook for the economy? We're going to turn to Alan Sinai, who's president and chief global economist of Decision Economics. Alan has advised administration officials and consulted for the Fed. So when he speaks, we all should listen. Alan, thank you so much for joining us.
Thanks. Nice to be here.
So the headline at this hour had been Philadelphia Fed manufacturing contracted at a faster pace than was expected. But then this morning we heard fewer jobless claims filed. So between the push and the pull, what's dominating?
What's happening,
here?
we are working our way to some sort of recovery, technically speaking, by early fall. I think the labor market improvement showing up in the claims and continuing claims is more important than the Philly Fed extra contraction.
Can you call that a labor market improvement? I mean, we had President Obama saying, yes, indeed, unemployment's likely to tick higher than 10%. I mean, we're above 9.5% at this point. But there's concern that unemployment will continue to grow. So can we really call this an improvement?
No, you're absolutely right. The improvement is it gets less negative.
Right.
It's not as bad as it was. And we're seeing signs that the tremendous slide in business spending and jobs is getting less so, and that's part of forming a bottom and moving on to recovery. That's the kind of improvements going on. But the unemployment rate does lag any turn in the economy, and it will keep going up, and we're probably, unfortunately, going to go above 10%. It's going to be a big, big problem. Joblessness will probably be the biggest problem the Obama administration is going to face for a long time.
Yeah. When you put that question of employment in the broader global context and the idea that, you know, consumer spending not only makes up such a huge percentage of this economy, but when you look at China's economy, per se, the amount that consumers in America buy has a direct impact on their manufacturing sector. Today we heard China, first major economy to come out of recession. What is that? Is that simply the result of stimulus in China, or are we seeing something play out on a more global scale?
I think the Chinese story is bigger than just the government spending stimulus, which is the main reason why they bottomed out and began to grow again. And they, I think, understand that their export prospects are going to be nowhere near as good as they were. So they are working to get their consumers to spend more. And I think we're going to see in the next year, 2 or 3, domestic industry like autos in China get very big, very active, and the government do a lot of things to get their consumers to spend. We think they're going to make that turn and be an economic powerhouse, not just now, but forever.
But forever. Indonesia, the new term that people are throwing out there, not just China, also India, also Indonesia.
In India and Indonesia. Now, out there, the politics are less certain. We understand that world much less than we understand the developed country world, the U.S. and Europe. But that's where the dynamism is. And as long as we don't have a global kind of crash like we had, they're going to do very well, relatively speaking. And I think the equity markets will have definitely decoupled for those countries, and we'll keep on doing that.
So the decoupling trend that sort of had been debunked, or the decoupling theory, rather, that had been debunked, do you think maybe the call was too soon? Perhaps we will see a decoupling play out in the recovery period?
Fundamentally, in terms of the relative strength economically, in terms of wealth, in terms of potential growth, decoupling is real. Everybody went down together in the stock market and in the economy because the whole global economy crashed. But something like that, decoupling is for real. And if it's real fundamentally in terms of how they are in their economies and prospects, it's going to show up in the relative returns on stocks as well. And we'll have decoupling in the equity markets. They're going to do better.
They're going to do better. Today, I do want to ask you a question about what's happening in Washington today, because, you know, while the markets seem to have looked aside from the hearings in Washington, it does sort of raise a broader question of whether the former Treasury Secretary Paulson was correct or not in having taken the action he did last fall in urging Bank of America to take over Merrill Lynch. Do you think truly that we are past the kind of cataclysmic event that truly threatens and poses systemic risk to the market and to the economy right now?
You know, the financial system still has systemic risk. We see something all the time like CIT. It's not as It's a big deal, but not as big as before. We are past the worst of the crisis. We are definitely past the worst of the crisis. We're actually bullish on financials. And whether Paulson did the right thing or not in a rather heavy-handed way of bringing those two companies together, that's what it is, and they will be a powerhouse. Bank of America / Merrill Lynch once we get through the credit risk cycle and the consumers begin to come back, take a little time, that institution will be a powerhouse.
Stick with us. More questions for you.
Sure.
More questions with Alan Sinai, President, Decision Economics. Stick with us here on Bloomberg. Welcome back to Bloomberg. Alan Sinai, President and Chief Global Economist of Decision Economics, is with us. He's stuck with us through this break. Alan, before we left to go to break, we were talking about the decision on Treasury Secretary Paulson's part to take some emergency action there to essentially force Bank of America to take over Merrill Lynch. Take a step back now and look at where we are today. CIT, it appears, not going to get a second round of a bailout here from the government. They're being deemed not big enough, not too much of a threat. They're allowed to fail, essentially, is the presumption, and we're seeing that in the market today. I mean, is it every other bank? Is it every other lender? What's the theory here?
It's political.
It's purely political.
Look, the hostility of the American public to these bailouts and the use of taxpayer money to help out the financial institutions is huge. It's a big political thing. They can't easily put the money out anymore. We have huge deficits. They can't easily put the money out anymore. So conditions are different today than they were before.
But how do you sell the idea that CIT already has received taxpayer funds, in essence, by getting an infusion of capital? So it'll be the first one to accept TARP to potentially go into bankruptcy.
I don't think they should try to sell the idea. They just changed their mind. They just don't think in today's conditions they're going to put the money out. There's too much money to put out, and the government doesn't want to do it. I happen to agree with that. I think they should file for bankruptcy, and we should go through whatever we have to go through as part of that. And I've thought that about a lot of other instances as well. But our situation now is less fragile than it was 6, 8, 10 months ago. In other words, I don't think this is going to torpedo the financial markets the way a CIT bankruptcy filing might have torpedoed the financial markets early this year had it happened. It's a different set of conditions now.
Not on life support at this point. But
Yeah,
then Mark
we don't need the
Mobius,
life support the way we did before.
Mark Mobius earlier this week had said, and we do hope to speak to him on this program later on, tomorrow rather, he had said that he does potentially see another, not cataclysmic, but major event that could threaten the markets. There's been a lot more doom and gloom resurfacing, green shoots turning brown.
We can always see stuff like that. This would have been a bigger event 8 or 9 months ago. I'm more optimistic. I'm more bullish. This is not to say our economy is going to do great. It's not going to do great at all. It's going to be very tough. But from a forward-looking view, when you look at the equity market and the economy turning from recession to recovery, I think you can only be bullish and look for things that can hurt you that will temporarily create slides, but not derail what always goes on once the economy begins to get going, some sort of equity bull market.
Thank you so much, Alan Sinai. Thanks for sticking with us.